Hi guys, and welcome to episode number 2. This will be the Dividend stock buy list for the week of December 9th, 2019. And what I wanted to do is go ahead and highlight my thought process behind the stocks that are on my radar this week. So one thing that you'll notice, it is getting extremely hard to find good stocks out there, at least the highest quality stocks, the true blue chips that are on a discount at the moment. So to me, this is a good time to take a bit of a calculated risk to go in and find some stocks that are maybe in an industry that are a little beat down. So I'm going to highlight 3 stocks this week that to me are ones to look at. So the first one that I'm seeing here towards the top of our list is MPLX. So if you look here, there are a ton of energy stocks that are among the most heavily discounted. Energy is beat down right now. MPLX is currently trading at $24.19. Morningstar sees the fair value of the company at $39.50, so almost a 40% discount to what they see the value at. So they do have some risk, a little lower quality than what I would ideally go after. And this number down here makes me a little bit nervous. This is the Simply Safe Dividends rating of 41 on the dividend safety. However, what we do also see here, let me scroll this into the screen, is a massive 11.2% dividend. Now, of course, whenever you see a dividend this high, you know there's something to worry about. But all in all, I think the dividend looks relatively safe to me, despite what Simply Safe Dividends says. I would say go in and do your own research, but I think they're a decent gamble right now. The next stock that I'm going to go to for this week is LAZ. So they're in the financial services asset management company. Little over a 20% discount right now. They trade at $38.79. Morningstar is listing their value at $49.50. They are a level 8 quality stock on the Dividend Sensei scale. Again, there's some high risk here. Also, again, we have a little more unsafe dividend that I would normally go for, but I think, again, this is a pretty good risk. Things look relatively safe to me, well covered. One thing that's interesting about LAZ is that they always pay a special dividend, generally in February. So if you're interested in them, you generally get a very good special dividend that comes in. I believe last year it was 50 cents a share, on top of a pretty decent yield to begin with. So I think LAZ is another good one to look at. And the third stock that I'm looking at this week is Simon Property Group. They're a REIT, and part of the reason that they're down right now is just it's the Amazon effect. So this is the concern about malls. They tend to run the much more high quality malls. So this is the debate that's going on right now, is are those higher quality malls going to survive, or are they going to collapse? I'm of the mindset that there's always going to be a place for some of the malls. So I think the higher quality malls will still be around. So I think this is a pretty decent gamble. They're trading right now at $148.24. Their fair value on Morningstar is at $189, so a little over a 20% margin of safety there. 11 quality stock with the Dividend Sensei scale, a narrow moat, exemplary stewardship. They have a really, really good balance sheet. So I think if anybody's going to survive in this industry, then Simon is as good a bet as any. What I'd like to do next is kind of go in and look at some of the stocks that are also being discounted right now according to their Morningstar value. But you'll see some high quality stocks in here. And one that I'd like to look at here is McDonald's. And I honestly don't agree with the valuation that you see on Morningstar. So, I mean, we all know McDonald's. We all know this is generally a stock that most of us would love to have in our portfolio. And if you just look at the data here, they look quite good. So if we look down here, we're trading at almost a 10% discount for a world-class company like McDonald's. Level 10 quality on the Dividend Sensei scale, wide mode, of course, and a generally very safe dividend over here. Okay, so what I want to do next is to go into why I don't actually think McDonald's is a very good buy right now. Okay, so we're now inside of Fast Graphs here, and for those of you that don't know it, this is one tool I have absolutely no problem paying the monthly fee for. It's an absolutely amazing tool for gaining insights into valuation for companies. And what I keep coming back to is looking for the actual value of a company and not just going by what we see as far as price action, because the price is all over the place. I mean, it honestly just doesn't mean anything. And but what you can see here is on our graph, we're looking for the actual value of the company, and you can see over time here, the market has generally valued McDonald's at a 19.26 PE ratio. So 19.26 times forward earnings. That's the blue line here. So this other line up here, so this is the price. So for me to want to buy McDonald's, I would want it to be around fair value. Now, for a company as good as McDonald's, I would happily pay fair value. For others, I might want to have more of a margin of safety. I might want to get them at a discount. McDonald's, I'd be happy to pay fair value. Unfortunately, right now, so where we'd like to see this down here around a 19.3, McDonald's is currently trading at almost a 25 PE. And we've seen it come down already. It was up over 27. And I've seen a lot of people on the different dividend sites getting excited about McDonald's and calling it a buy. I don't actually see it as a buy. And if you look where it would need to get to be around what it would be a buy for me, that's somewhere down, it looks like around $151. I'm not sure it's going to get there anytime soon. Whenever McDonald's does become a buy, obviously it's a great stock. Obviously I'd be happy to own it, but not at this price. I think there's a very good chance that McDonald's can perform very well, but you still end up losing money on this over time. And I'll get into more examples of that in future videos. But okay, so that about does it for this week. So 3 buys and one company, McDonald's, which has come down, but not to the point that I'm interested. So hope you all have a great week investing. Please hit the like, hit the subscribe, and I will be back here next week with more ideas for stocks that you can look at to buy out on the market. Happy investing.